Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Thank you for joining us this afternoon. Welcome, everyone. We're excited to have with us today Mike Tosaw, the Director of Education for OptionsXpress and a leading instructor and options expert. If you're not familiar with Mike, he's the man behind many of OptionsXpress's online tutorials and live webinars. His audiences around the country include online traders, members of investment clubs, and independent representatives seeking education about online stock and options trading. He has a first-hand experience as a retail investor and investment advisor, which makes him a great resource for all investors. I'm going to turn it over to you, Mike.
Okay, can everybody hear me? Just to retest the sound, I know that we did a sound check earlier, but if you guys can all type yes in the chat boxes, if you guys can make sure you can hear me just to be safe. Okay, thank you. Well, I would like to thank the ISE for letting me present today. It's always a pleasure to work with the International Securities Exchange. We work a lot with them, and let me make sure that we have everything going up here. Okay, and it's a very exciting time right now in the currency market, just from the standpoint that people are starting to look at it again. The other day, I believe it was about 2 weeks ago, when the Fed made their announcement that they were basically going to buy everything, so to speak, there was a lot of movement in the currency market, and suddenly currencies became popular again. So what we want to talk about today are some things that have to do with not only the currency markets themselves, but ways with which you can do some type of non-directional currency trading. Now, before we proceed any further, we do need to mention that options and futures do involve risk. Please read the characteristics and risks of standardized options. It's available by contacting the number on the screen, or you can go to OptionsXpress.com, or I'm sure you can get it at ISE.com. But we do recommend that you read that to make sure that you have an understanding of the risks that are involved with the product. Now, a little bit about the ISE FX options. Some things that we'll be talking about in detail today, they are accessible through your options broker. Now, I work for OptionsXpress. That's my broker, and every option trade that I've ever made my entire trading career has been through OptionsXpress, so I do practice what I preach. What these are, they're exchange-listed securities, so you don't have to worry about intermediary risk or anything like that. This is all regulated. So let's say for some reason you don't like the fill that you get on a call option. You can first contact OptionsXpress, then we can contact the ISE, and then let's say for some reason the ISE didn't do a good job with their fill. They're regulated by the SEC. So the thing that I really like about this option product is that you do have regulation. This is also a cash-settled product, so you don't have to worry about someone knocking on your door bringing you a briefcase full of euros one day, or pounds, or whatever the case may be. It's European-style exercise, so if you are a short option trader and you're concerned with early assignment, you don't have to worry about that. And if you're a long option trader, quite frankly, most of the time it doesn't make sense to exercise your options early anyway, so the European style can definitely be a good thing. And the other thing that we're going to discuss quite a bit today is how you can actually trade these products as spreads. You can see the actual currencies that exist within this product, so let's proceed. What we're going to be going through today, we're going to be going through why you would consider trading currencies. Why you would want to consider doing some type of a neutral strategy with currencies. We're going to talk about what would happen, what types of strategies that you could use if you are expecting a lot of movement in the underlying currency. We're going to talk about strategies that could exist or that could work if you are looking for no movement in the currencies. We're also going to go through volatility trading. Folks, there's 6 factors of option trading, and we're going to be going through those and how they can relate to currency-based options. Now, at the end, we're going to go through a couple of other reasons as to why you would consider trading ISC currencies. And within that, we'll talk about ways with which you can hedge yourself based upon foreign currency risk. If you have, let's say, foreign bonds in your portfolio, we'll talk about how you can use these as a hedge. We'll talk about ways with which you can use these products as a way to build up a portfolio, build up what I like to refer to sometimes as a time decay or a theta portfolio. And we'll be covering quite a bit. Now, as we go through this, if you have a question that you're really dying to get answered right away, feel free to type it in the box. I'll be more than happy to answer it. But if it can wait till the end, we prefer that we work it out that way, because at the end, I will be more than happy to stick around and answer whatever questions that you would like to have answered. I'll do my best. Now, unfortunately, I'm not able to tell you where the market's going to go tomorrow. That's a question that I'm going to leave up to the folks at the ISC. Just kidding on that one. Why would you want to do currencies? And why would you want to consider doing neutral currencies? Why would you want to do a neutral strategy on a currency? Well, the first question that I would ask myself is, well, can you predict the future? And I'm playing devil's advocate. For those of you that are trying to predict the currencies and that are maybe trading the spot Forex, or you're trading this product already and making money off the trend, I'm not trying to step on your toes. But let's say that you're of the opinion that you don't feel that this is a predictable product, or you don't believe that you can predict where the currencies are going to go. What we're doing today is showing you ways with which you can use the option product to do delta neutral, gamma neutral, and those styles of trades. So just because you don't feel like you can predict the future, sometimes maybe you can set up a strategy that gives yourself a little bit more leeway. Now keep in mind, in all option trading, everything's give and take. And we can also show you ways with which you can do what's known as premium selling as well. We'll be covering that. The next one, are you a long-term stock market bull? Now, I do webinars frequently for OptionsXpress. I travel the country. I actually did a webinar with Steve Meisinger from the ISC in Orlando this past Saturday. I think it shows the dedication of the ISC. Steve just took a day off of his vacation in Disney World to come to do a seminar with us. And one thing that I've noticed, there's a lot of long-term stock market bulls out there. And sometimes that kind of gets in the way of being an objective trader if you're looking to play both sides of the market, whether you're bullish or bearish. Currencies can offer an outlet to that. Let's elaborate. This is a chart, and what you're looking at right there is EUI. EUI is the dollar-based ISE currency based upon the euro. So we see in here that on March 18th, a few weeks ago, we actually had quite the down day. Now, the way that this works, this is the dollar in relation to the euro. So the US dollar went down quite a bit that day. Now, the reason for that, or I guess I'm not able to guarantee any reason, but most likely the reason for that, in terms of that had such a crazy down day that day, was because the Fed made their announcement that they were going to they were going to buy everything for the most part. They were going to do everything that they could possibly do to get us out of this recession. Now, I'm not trying to get political here or anything, but the reality of it is that day, that was a major factor in the euro going up in value and the US dollar going down in value. Now, let's say you were on the wrong side of that trade. You lost a lot of money.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.